Been a big few days on share markets. We haven't seen drops of this magnitude for a few years. You're right to be feeling a little bit worried. I just wanted to talk about what's going on and if you need to do anything about it. So firstly, what's going on? Broadly, there's this sentiment out there that the American economy is slowing at a much faster rate than what people originally thought, particularly the US Fed. There's a lot of speculation that they'll start to drop interest rates soon, and there's a train of thought out there that probably the US Fed maybe should have started dropping interest rates earlier to slow down the rate at which the US economy is slowing. I've seen a range of kind of interesting data points over the last few days. New shoe sales is at the lowest level it's been for a few years. Nintendo and their gaming consoles, the Switch, Nintendo's selling a whole lot less of those at the moment. So a whole lot of signs pointing to a bit of a slowdown in the US economy. And as I said, this idea that maybe the US Fed should have already started dropping interest rates, it's quite likely that they will soon. Now remember, the whole point of raising interest rates in the first place over the last few years was to slow things down. Inflation was out of control and a few other things. So the intention was to slow the economy down, but maybe it's slowing at a faster rate than what everyone thought. So what should you do about it? Depends where you sit, ultimately driven by your age. If you're young enough and you're still working, you're accumulating up your super balance, you're investing into other things, now's a good time to continue going on with those strategies. Just because things have dropped over the last few days, it doesn't necessarily change that. Remember, every dollar that you're investing today is buying more things today, more investments today than what it could a couple of days ago. For those that are older, retired, living off their retirement savings, you'll recall through the meetings that I've been having with you over the last few months, where we've had a view that we thought share markets were a bit on the higher side, and we've been holding cash and term deposits and enhanced yield, a bit more of a conservative stance in portfolios for a few months now. We weren't expecting a big drop like we've seen in the last couple of days, but this kind of risk-return trade-off, as I've been explaining, we didn't think it quite stacked up. Now remember, when you follow that three-bucket approach that we have in place, there's some money in cash, there's some money in interest-earning investments, there's enough money in those types of assets to see you through for many years. You don't need to worry about daily ups and downs in the share market. We may very well see things drop again today. It's Tuesday morning as I'm recording this. Who knows how much further it will go. You have plenty of buffers in those cash and interest earning investments to see you through times like this. That's the whole reason why we have investments set up in that way. If you do have any concerns with your portfolio or anything else, please reach out. Happy to have a chat. All the best. Bye.